Hello, this is Mijun from the American Stock Theory University. Let's start today's United States stock news for July 28th. Welcome again to Mijun, where we always stick to the fundamentals of United States stock investing, Mijun family members. I hope you all had an enjoyable and relaxing weekend. My wife and I had a really tough weekend. Now, there aren't many days left until we leave the United Kingdom, about 10 days or so. But moving abroad is definitely different from just moving within the same city or country. We have to get rid of most of the things we own, like furniture and appliances. That process takes a lot of time and effort. Things like the blankets we used, and in my case, I'm doing this broadcast in front of a big screen, and I have to sell this screen, and I also sold my television, and soon I also have to sell this desk I'm using right now. I've already sold most of the big furniture and household items, but I'm still keeping this screen and desk for the broadcast. Anyway, I spent the whole weekend cleaning, selling things, meeting people, and handing over items, so it was a really hectic 2 days. And since I was working after a long time, my back started to hurt. It's been a while since I did physical work like this, so I think I might have strained my back a bit. This is also one of the reasons why I'm moving to Malaysia. Now that I'm over 50, it's getting really hard for me to do everything myself. That's why in Southeast Asia, labor is cheap and you can use various services at a very low cost. So when that time comes, even if I have to move again, I can just use a full-service moving company for everything. In the United Kingdom, you really have to do everything yourself. You have to buy the materials and make furniture yourself, and usually people buy from a brand called IKEA. So, facing old age in a country where labor costs are so high seems like it would be a terrible thing. So I want to be somewhere a bit more comfortable physically, because when your body is comfortable, your mind is at ease too. I'm just 2 weeks away from going to a place like that. I think I can probably do broadcasts with Mijiwon until this week, but starting next week, I won't have a desk or a screen, so I won't be able to broadcast anymore. So I'm thinking about what I should do now. I'll make an announcement soon. Today's big juicing news for July 28th is ready. Let's begin immediately. Today, I would like to read a comment left by one of our valued subscribers together with you. Recently, as I read through various comments, many of you have given feedback saying you really enjoy me reading the comments. Today, it's not a question. I just think this comment itself could be helpful to many people, so I'd like to read it out. This is from someone with the username Guchodo. Mio, this is my first time writing a proper comment. I joined Jihunmi's channel during the COVID-19 period, and I remember that at that time, Jihunmi's family was living in Southeast Asia. It was the first time I started to take an interest in United States stocks. Back then, I tried it for a bit, then took a long break, but since last year, I've been listening at least 3 times a week again. When it comes to United States stocks, I mostly invest based on Mi Ji-hoon's broadcasts. However, I'm about the same age as Mi Ji-hoon, but to prepare for retirement, I have a significant portion of dividend stocks, so my portfolio is a bit different in that regard. I recently bought or held on to stocks mentioned in Mijunim's broadcasts. If it were up to me, I would have sold them already for a profit, but they remain in my portfolio. I'm holding big tech stocks like Palantir, Nvidia, Amazon, Google, and Tesla, as well as growth stocks like Advanced Micro Devices and Broadcom. Also, after seeing that Mijihonim included Coinbase in the portfolio, I bought Strategy Coinbase BlackRock. Additionally, I purchased BITX and ETHU after reconsidering, and recently, I newly entered Bitmain Immersion Technology as well. You're investing very aggressively right now. What impressed me the most from Mijihonim was that selling rising stocks to buy more of falling stocks is going in the exact opposite direction, and it's something you should never do. I think you emphasized this a lot on the Hawaii Mansion channel, and that's exactly how I had been investing in stocks for several years. I've come to my senses again, increased my cash holdings, and I'm repeating this process. However, when a correction comes instead of a bull market like these days, it's advantageous to hold cash. And even if I don't make additional purchases, I know it brings peace of mind, but it's still not easy to do. When the market crashed earlier this year due to tariffs and other reasons, if I had held cash, I could have bought more at lower prices and made bigger profits. But even during the crash, I foolishly kept selling off stocks that were still in the plus. Anyway, just like the name of your channel, Mijunim, I sincerely hope the day comes when I can retire with United States stocks. Anyway, just like the name of your channel, Mijunim, I sincerely hope the day comes when I can retire with United States stocks. Anyway, just like the name of your channel, Mijunim, I sincerely hope the day comes when I can retire with United States stocks. And not only in good markets, but also when a crisis comes and the market is bad, I try to get myself together, increase my cash holdings, and repeat this process. However, when a correction comes instead of a rising market like these days, I know it's better to hold cash and that it gives me peace of mind, even if I don't make additional purchases, but it's still not easy to do. When the market crashed earlier this year due to tariffs and other reasons, if I had held cash, I could have bought more at lower prices and made bigger profits, but instead, I foolishly kept selling off stocks that were still in the positive even during the crash. Anyway, Mijunim, just like your channel name, I sincerely hope the day comes when we can retire with United States stocks, and I ask that you continue to share your great insights, not only in good markets, but even more so during crises and tough times. That was a bit of a long comment, but I think you shared a very valuable experience that's worth reading together. There have been many similar comments lately. Stocks have gone up a lot. Should I sell them? This stock has dropped a lot. Should I buy more? Even if I don't give you a direct answer to this, Kucho Tonim seems to have described a wise investment method here very well. And there's one more thing we need to think about. We need to remember what the current stock market looks like. In a way, I've been saying since last week that we're starting to see a bit of a fruit phenomenon. When bubbles start to form in the market little by little like this, at that point, there's a possibility that a technical correction could appear soon, or at the very least, even if it's not a full correction. There tends to be a pause or a breather after a 4% or 5% drop. So, in my opinion, right now it might be a bit risky to buy new stocks. Of course, this is also the kind of market where fear of missing out can easily appear. When you buy stocks, they always seem to go up, so you probably feel a strong desire to buy. At times like this, I personally think that securing your target cash ratio is actually a much wiser attitude for an investor. Now, I would like to once again thank Mr. Kuchoto for leaving such a great comment. All right, then let's officially start by reviewing the United States stock market trends from last week. I've changed the S&P 500 chart period to 1 week. Last week, you can see there was a lot more green than red. So overall, you can see a positive trend where most sectors and most stocks in the S&P 500 are rising. But there's one thing to note. Over the past week, it wasn't really a market led by mega tech companies. The number one company by market cap, Nvidia, and number two, Microsoft, are shown in a rather dull green, meaning their gains were quite modest, and number three by market cap, Apple, also looks dull. Amazon, fourth, and Google, fifth, performed well overall. Meta, sixth, was up 1.19%. So, the movement of the Magnificent Seven was just so-so. Moreover, Tesla dropped a lot. So we can see that it wasn't a market led by mega tech companies. If you actually look at the index movements over the past week, the S&P 500 performed the best, rising 1.52%. Second was the mid-cap stocks at 1.44%, and the Dow Jones went up by 1.3%. But the Nasdaq 100 at the bottom only rose by 0.91%, making it the weakest performer among the major indices. If you look further down at the performance of the 11 sectors of the S&P 500, it's the same story. The good news is that all 11 sectors were in the positive. But if you look at the top, healthcare, materials, and industrials, those sectors surged quite a lot, while technology at the very bottom only rose by 0.42%, so it was relatively weak. So over the past week, instead of tech stocks, funds were distributed across various sectors, leading to an overall rise and broadening the market. That's how we can wrap it up. However, despite that, the performance of Mijuon's top picks was still pretty good. The stock that performed the best over the past week was Credo Technology. It managed to achieve an additional increase of 8.29%. The second was Trade Desk, which did well with a plus 7.39%. Celestica was up 6.31%, Advanced Micro Devices up 6.04%, Talos Energy up 5.47%, First Solar up 5.39%, Google up 4.39%, Palantir up 3.44%, Broadcom up 2.41%, Amazon up 2.35%, and Taiwan Semiconductor Manufacturing Company up 2.16%. Bitcoin went up 1.79% and is now at 118,900. In addition, Meta was up 1.19%, Uber up 0.77%, and Nvidia also closed up 0.63%. Only 5 stocks went down. First, Vistra was down 0.42%, Bit was down 1.14%, and Strategy was down 4.09%, Tesla dropped 4.12%, and Coinbase fell 6.7%, performing the worst. So over the past week, Bitcoin-related stocks were a bit sluggish, and with Tesla joining in, both Bitcoin and Tesla didn't perform well. Most of the other artificial intelligence-related stocks are showing a positive trend, with most of them rising. Over the past week, the United States stock market has maintained a steady upward trend like this. On Monday, as a new week begins, let's check the movement of the futures index. Dow Jones futures are up 0.19%, S&P 500 futures are up 0.34%, and as for Nasdaq, it's showing a sharp rise of 0.61%. Now there's a reason why the futures index is moving well starting this Monday. Yesterday, on Sunday, President Trump delivered some exciting news again. As stated in the headline of this article, President Trump reached a tariff agreement with the European Union, at a rate of 15%, which is very positive news. First, let's just read the key points. The United States and the European Union have agreed on a trade deal to impose a 15% tariff on most European products, including automobiles. The European Union has promised to purchase $750 billion worth of American energy and to invest $600 billion in the United States. And this investment is an additional investment, so now the European Union is also strengthening its investments in the United States. Furthermore, they will purchase an additional $750 billion worth of American energy. Therefore, it's highly likely that American energy-related stocks will show a very positive trend. In addition, certain items like aircraft, some chemicals, and pharmaceuticals have been completely excluded from the new tariffs, meaning there will be no tariffs on them. So, as a result, European leaders are expressing relief at having avoided a trade war. They have shown a cautious stance regarding some of the increased tariffs. There were rumors here and there. It was said that it would be frozen at around 10%. So the European Union was expecting 10%, not 15%. But still, originally there was talk of a 30% tariff. So since the tariff has been reduced from 30% to 15%, the general reaction in the market is that we can interpret this as very positive news. All right, let's wrap it up with a final word from Mijuon. What about the news of the United States-European Union trade agreement this time? It's expected to have a generally positive impact on the United States stock market. First of all, the biggest positive factor is that there was a high tariff of up to 30%, and the European Union was also preparing retaliatory tariffs. Therefore, the most positive aspect is that we've avoided this worst-case scenario. So, as I mentioned before, the market usually reflects the worst-case scenario. And then if the situation improves from that worst-case scenario, stock prices can rise. That's how we can understand it. Therefore, at least in the short term, this can stimulate investors' risk appetite. Therefore, money may flow into riskier assets like stocks rather than safer assets like bonds. It has become more likely to act as a factor that drives up stock prices across the entire market. Now, The European Union also accounts for the largest share of United States imports. If I go up and show you the chart for a moment, the European Union is currently the number one source of United States imports. Mexico is second, Canada is third, and China is fourth. The European Union stands out by a significant margin. More than 20% of all goods imported into the United States are currently coming from the European Union. What that means is this: if tariffs on the European Union, which accounts for the largest share of United States imports, are lowered to 15%, the likelihood of inflation recurring will decrease. So, since the European Union accounts for such a large portion of imports, it goes over 20%. But if the tariff is only 15%, the argument that inflation will accelerate because of tariffs is likely to subside. The United States economy is currently maintaining a Goldilocks situation. Therefore, if inflation doesn't surge again, there's a high possibility that the Fed will completely prevent a recession. Therefore, as a result, there is a good chance that this major upward cycle will be prolonged. I'd like to evaluate this positively. In other words, in the short term, there's no chance of a bear market coming. Just a moment ago, I mentioned that the market is getting a bit overheated right now. We need to separate these two things in our minds. What I mentioned earlier is that technically a correction could occur. When I say it's overheated, I mean stock prices have risen too fast in a short time. In this situation, for investors with a short investment period, there's a high chance they'll want to take some profits. Thus, a short-term correction is possible. The crucial question is whether a bear market is likely or if the overall upward trend remains intact. That's the key consideration. So now, with the European Union and tariffs being agreed upon and a relatively reasonable tariff rate of 15% being applied, I personally believe that the possibility of a bear market has actually decreased. Now let's examine the S&P 500's momentum. Currently, the United States stock market's momentum is very strong. Out of 26 indicators, only one is suggesting a sell, 10 are neutral, and 15 are recommending a buy. Of course, since the relative strength index has risen to 76, there's always a possibility that a technical correction could occur soon. Let's take a look at the chart. It has completely formed a V-shaped rebound. Now it's steadily moving past its previous high. From a technical perspective, the stock has shown a strong upward trend since May, and the price has been steadily rising without breaking below the 21-day moving average, showing strong support. Now this orange line here is the 21-day moving average, and you can see the 21-day moving average is following along. It hasn't dropped below it even once, right? That means as long as the 21-day moving average isn't broken downward, this kind of sharp upward trend is likely to continue. So, until the 21-day moving average is broken, it's not a bad idea to maintain a positive mindset. However, a short-term correction or pullback is highly possible. To assess the situation, check if the 21-day moving average is broken. If it is, the next point to consider is the previous high. Is it possible to bounce back from the horizontal support line? So, if 6,200 isn't broken and it rebounds again, that means the positive trend is being maintained. That's how you can look at it. But if the stock price breaks below the first support line at 6,200, then it can be interpreted as a signal that the trend is reversing for the time being. If you look at the S&P 500 stock chart we just looked at together, you'll see that the United States stock market is clearly in an upward trend right now. But I've often told you that the reason momentum slows down is because of catalysts. Now, and also, this week, there are a lot of major catalysts that could either strengthen the trend or completely reverse it. So for this week, I think we need to organize and see exactly what catalysts are out there. First of all, July 28th, which is today, you only need to pay attention to one thing. Among the June top picks, Celestica is announcing its earnings. So depending on the results, Celestica's stock price is likely to move significantly. That's how you should see it. Second, on Tuesday, July 29th, the first thing is United States Treasury Secretary Scopersant. He is scheduled to meet with his Chinese counterpart in Stockholm for additional trade talks. So now they've reached an agreement with the European Union, and if they also reach a deal with China, if there is good news from the talks with China, there's a high possibility that positive energy will overflow in the United States stock market. So until Tuesday, I don't see any particular negative factors. That's my personal opinion. Of course, there are things like the Consumer Confidence Index and the job openings and labor turnover survey employment report, but in my opinion, as long as the numbers aren't bad, the atmosphere should be fine until Wednesday. That's my personal judgment. Wednesday and Thursday are crucial, with significant earnings announcements scheduled for Wednesday. First, there's Microsoft, second is Meta, and third is Qualcomm. Here, Microsoft and Meta are especially important for the overall semiconductor stocks. What if Microsoft and Meta, if they announce that they will increase their capital expenditures or at least maintain them, for example? Artificial intelligence beneficiary stocks, particularly Nvidia, are likely to regain momentum. Therefore, for investors like us who focus on artificial intelligence beneficiary stocks, it's important to pay attention to the earnings results of Microsoft and Meta, and also to what their management says about capital expenditures. Now, on Wednesday, several important announcements will be made. At 8:30 anti-meridian, the preliminary estimate for Q2 gross domestic product will be released. Well, the gross domestic product in the first quarter didn't mean much because imports increased a lot due to tariffs. So the first quarter gross domestic product wasn't important. Now, what's important is how strong the United States economy is as the impact of tariffs has subsided a bit. That's what we can check. And then at 2 post-meridian, the Federal Reserve's Federal Open Market Committee meeting will end, and the monetary policy statement will be released. Of course, since there won't be a dot plot in this statement, what's more important than the statement itself is Jerome Powell, the Fed chair's press conference. That's how you should see it. For your information, the Federal Open Market Committee meeting will not be held in August. So after July, the next one is in September. The possibility of a rate cut in July looks very low. Therefore, what's important is what Chairman Powell says about September. If he gives the impression that rates will be cut in September, the market will likely see it as a very positive sign. But if a rate cut still seems far off even in September, then with only September, October, November, and December left, the market might start to wonder, so when are they actually going to cut rates? Therefore, I personally think Powell's press conference is extremely important. Now next is Thursday. On Thursday, especially for the Mijon family members, there will be a lot of noteworthy earnings announcements. First, Amazon will announce earnings. Second is Per Solar. Third is Coinbase. And then Strategy. MicroStrategy will also announce their earnings. On top of that, even Apple, which we haven't invested in, will be announcing earnings. So you can see that it's a very important day for earnings announcements. Well, that's not all. At 8:30 in the morning, the core personal consumption expenditures for June, which we usually call personal consumption expenditures, will be released. This core personal consumption expenditures price index report will be released. And as you all know well, the core personal consumption expenditures is the report most favored by the Fed. So this figure needs to be good for us to at least have confidence that interest rates will be cut in September. So you can see that the personal consumption expenditures inflation indicator is a figure you definitely need to check to see how it comes out. And on Friday, there's also something important, but I don't think we need to wait until Friday. The deadline for Trump's tariffs is finally August 1st, so we should hear a lot of good news before then. Currently, they are negotiating with the European Union and several other countries. If a lot of positive news is announced, the United States stock market will rise again this week. If August 1st gets closer and there's still no significant news, then there's a possibility that the momentum could be lost. And at 8:30, the employment report for July will be released. The top priority now is ensuring inflation remains under control and does not accelerate further. And another important thing is that while the Fed is getting ready to cut interest rates, it's still better if the employment report is strong. So economists are currently expecting an increase of about 115,000 jobs, which is a significant slowdown compared to June. But if the number falls significantly short, for instance, if even 100,000 jobs aren't created, a dark shadow would be cast over the situation, making the unemployment rate even more critical. Last month it was 4.1%, but it's expected to rise slightly to 4.2%. But if this figure keeps rising to 4.4 or 4.5, it's highly likely to have a negative impact on the market. So this week is packed with numerous catalysts ready to act as triggers. Catalysts can either strengthen the upward trend of stock prices or break it. Therefore, from our perspective as investors, in a situation where stock prices are soaring, no matter what the outcome is, whether the trend gets stronger or it breaks, we shouldn't have any regrets. So the most important thing is to organize a portfolio that will be good no matter what happens. I'll wrap up with that. The next article we've prepared is about Wall Street's recommended stocks. Today, there are 2 recommended stocks, and the person who recommended them is Dan Niles. It's this investor right here. In my opinion, Dan Niles has a very high accuracy rate. When he recommended Meta in the past, the returns were also very good. So, it's reasonable to expect that the stocks Dan Niles recommends will likely perform well for a while. Let's take a look at which stocks Dan Niles is currently recommending as Magnet and Bystant 7. Famous investor Dan Niles picked 2 stocks among the Magnet and Bystant 7 tech stocks as his top picks for the remainder of the second quarter earnings season. The first of the 2 stocks is Microsoft, which is scheduled to announce its fiscal fourth quarter earnings after the market closes this Wednesday. So you're probably curious why Dan Niles recommends Microsoft, right? Well, here it is. According to Dan Niles, one of the reasons this stock looks attractive is because it went through a very tough period last year. That's why it was included in the mid-June cap pick and then dropped out. Now let's examine what occurred. What about Microsoft's cloud computing platform, Azure? For 3 consecutive quarters, the company showed disappointing performance, so the stock price trend wasn't very good. Microsoft ended 2024 with a 12% increase, but during the same period, the S&P 500 index rose by as much as 23%. So compared to the market's rise, Microsoft has only gone up about half as much. But right now, Dan Niles is actually saying that this makes it more attractive. Because in January of this year, Microsoft started to improve after partnering with Open Artificial Intelligence on the Stargate Artificial Intelligence Supercomputer project. That's the assessment being made now. The Open Artificial Intelligence program runs on Azure, and Open Artificial Intelligence has also announced that it will make new and large-scale investments in Azure. After that, they restructured the agreement with Open Artificial Intelligence through the Stargate contract. In the third quarter, we actually witnessed Azure re-accelerating. Azure's growth rate slowed down over the past year, but has recently surged again, according to reports. And this means it's growing 2% faster than the December quarter. I think this benefit will continue as we move into June. In the end, what we're saying is that the growth rate of the cloud business, Azure, is rising again. However, Niles is giving a slight warning that expectations may be high ahead of Microsoft's earnings announcement. So, investors' expectations for Microsoft are very high. The market is assuming that Microsoft's earnings will be good, and that's why this could be a bit risky. That's how we can understand it. The second stock that Niles recommends is Nvidia. They will announce their second quarter earnings on August 27th. So, there's still a month left until the earnings announcement. He said that he became especially optimistic about this stock when Nvidia managed to handle the inventory that could no longer be sold to China due to United States government sanctions. Now, what this means is you probably remember the H20 chip. It was a chip made exclusively for China, and they had a huge stockpile of it. They had to write everything off as an expense since exports to China were blocked. However, last week the company announced that the previous ban was overturned and now they can continue selling the H20 chip to China. How many days has it been? I became optimistic after the triangular handling of the H20 chip inventory, and now China, which had been excluded from the performance model, is included again. So the current consensus in the market does not include China's sales and profits. But now we have to include them again. And another thing, we're now seeing that capital investment driven by much more sustainable inference rather than training is becoming very strong. He's saying something very important. Now, artificial intelligence inference refers to the process of inputting new data into a machine learning model to draw conclusions. On the other hand, training is the process of teaching the model to recognize patterns. So, once this training is done to a certain extent, there's no need to keep learning the same patterns over and over again. But artificial intelligence inference is different. Every time we go and ask ChatGPT a question, that's when we're using artificial intelligence inference. But the problem is, when I look back at myself, for example, 6 months ago, if I talked with artificial intelligence for about 5 to 10 minutes, now I talk with artificial intelligence for about 30 minutes a day, and sometimes even more than an hour. What that means is that more and more people are using artificial intelligence applications more and more. That's what it means. The computing power required for artificial intelligence applications is expected to continue growing, necessitating ongoing investments in equipment. We need more and more GPUs, right? So, as inference keeps getting more powerful and more people use it, the demand for NVIDIA GPUs could eventually increase exponentially. That's how I see it. Niall says that since we all want answers to our questions, the demand for inference will inevitably keep rising. We're not interested in training, so he concludes that this inference-based demand will continue to perform well. I'll wrap up with a final word from Jihunmi. I'd like to share some thoughts on how the reopening of the Chinese market might affect Nvidia's stock price. Now let me show you a chart below. What have analysts' earnings forecasts for Nvidia been like over the past 90 days? It clearly shows a negative trend, as summarized here. Let's take a look. First, if you look at the first data, earnings per share revision. Earnings per share revision means the earnings per share has been adjusted. And the standard is the past 3 months. What trend has it shown over the last 90 days? Now, 11 analysts actually raised their estimates, while as many as 25 people have lowered their estimates. Now, what are these estimates for? They are projections for the quarterly earnings to be announced on August 27th. So, the outlook for the earnings expected to be announced on August 27th. It went up 11 times and down 25 times, so it's been revised downward a lot. Now, if you look below, this is the revision for the whole year. The outlook for how NVIDIA's performance will change over the coming year has been revised here. Number 11, so 24.44% was revised upward, but as much as 75.56%, meaning 34 times, was revised downward. So the earnings have been revised downward this much. The reason is, as we all know, because the sales from China have dropped out. Another key point is the substantial difference in the median of the sectors that were revised upward. The sector median can be seen here in the data. Nvidia is a semiconductor stock, so the overall earnings outlook for semiconductors has now been revised upward. The percentage that went up is 63.82%, while the percentage that went down is only 36.81%. So what that means is overall the sector median has gone up, but only Nvidia's estimates have gone down. All right. The main reason behind this drop in consensus is that Nvidia Chief Executive Officer Jensen Huang announced during the last guidance release that due to strong United States export controls, revenue related to China would be completely excluded from the guidance. That was the decisive factor. So this time, Jensen Huang announced again that sales of Nvidia chips to China have resumed. If so, China's revenue can be included in the earnings forecast once more. This is highly significant. That's because most of the current conservative analyst estimates are based on the assumption that revenue from China is zero. Therefore, if $2 to $4 billion in revenue from China is included again in fiscal years 2025 and 2026, there's a high possibility that the market consensus will be adjusted very quickly in the short term. Now, when the consensus keeps going up like this, stock prices tend to rise a lot as well. It's important to remember this point. Now, in addition, as Dane Ryle-Ju emphasized, the artificial intelligence market is something that's expanding from training to the inference stage. The term expansion is key. It's more than just relocating. Training continues as it is, so there is still demand for training, and now it's expanding to inference as well. That's a more accurate way to look at it. If artificial intelligence services become active in China's huge domestic market, the demand for inference chips is likely to increase explosively. H20 is usually a chip used for inference. If that happens, there is a strong possibility that revenue from the Chinese market will rise exponentially in the future. Here, they're talking about around $2 to $4 billion, but there's a good chance that this number could rise sharply as well. Of course, the existing H20 production line has been converted for the production of other chips. Therefore, it may take some time to resume production of chips for China and to ensure a smooth supply. The United States-China relationship remains fluid and its future is uncertain. However, sales have resumed for the time being. Future political situations may lead to the reimposition of sanctions at any time, which we must keep in mind. But at least for now, I hope that the Chinese market is very likely to positively change NVIDIA's performance and stock outlook. Let's now examine NVIDIA's momentum after a hiatus. Out of 26 indicators, 4 are suggesting a sell, 8 are neutral, and 14 momentum indicators are suggesting a buy. Currently, the relative strength index has exceeded 72, therefore it's definitely in an overheated state, and that's undeniable. Here's Nvidia's one-year stock price chart, which moved sideways for the entire year. When a stock moves sideways for an extended period, it means that energy has been building up. After gathering this energy, it broke through the previous high with strong trading volume. So, you can see this as a very ideal surge pattern. Therefore, the technical aspect looks very positive. And there's a reason why the strong resistance line at $155 was broken like this. First, it's because Jen Snang, the chief executive officer, presented a vision that after artificial intelligence, the next growth engine for Nvidia is robotics. So, the GPU doesn't just end with artificial intelligence. Even when the era of autonomous driving and robotics comes, GPUs will continue to sell well. Presenting this vision is the first positive catalyst. Second, it doesn't stop there. There's also the expectation that the H20 chip will be exported to China again. There was more positive news. Therefore, you can see that this trend is being supported by fundamentally positive news. However, despite that, the gap with the moving average is widening due to the recent sharp rise. That means in the short term, it's likely to take a breather. In other words, a correction may occur. And even if a short-term correction does happen, if the 21-day moving average continues to hold, as you can see here, the price keeps rising along the 21-day moving average. As long as the 21-day moving average isn't broken, it means the sharp rise will likely continue. A downward break of the 21-day moving average signals a technical correction. In this case, the previous high before the correction is 155. There's a high possibility that it could fall to 155, but 155 will be a very strong support level. You can interpret it this way. The last content prepared for today is the Me John podcast. Today's main topic on the Me John podcast is Tesla. The article we'll listen to together is about Tesla's iPhone moment. The iPhone moment refers to the moment when a truly innovative new product and technology emerges. That's how you can look at it. Tesla is increasingly becoming an artificial intelligence company focusing on autonomous driving and robotics rather than solely an electric vehicle manufacturer. It's understandable to say that this moment is just beginning now. Now, it would be great if you could listen to the podcast to find out what evidence the author of this article has for claiming that Tesla's iPhone moment is just beginning in a fun and easy to understand way. That's all for today's broadcast. Thank you for joining me for the first show of the new week. It seems like this week's broadcast might be a bit tough, but I'll do my best to put together the show as best as I can in the circumstances I'm given. Let's all keep fighting together until the day we can all retire through investing in United States stocks. Have a happy day. Thank you. Hello, Mijun family. These days, some of you have contacted me saying you've made a lot of profits, and some of you want to meet up together. I'm having some very happy moments. Thank you so much.
Hello, yes, that's right. These days, I find myself feeling happy along with everyone else. Thank you sincerely. Today, we're going to analyze Peter Dagnoff's work and see if Tesla's iPhone moment has arrived. Let's dig into this together. This is an analysis from July 24th. It shows a very positive perspective on Tesla. He mentions the risks but sees a very high growth potential. We want to clarify the core logic of this analysis, especially what the iPhone moment analogy means and what risks we should be aware of. While we may not fully agree with the analyst's argument, we're considering it and acknowledging the existence of this perspective. All right, shall we get started? First, let's briefly look at the recent earnings. This quarter's sales exceeded expectations at $22.49 billion. Earnings per share was $0.40, which met expectations. But what's notable here is that the gross profit margin improved from 16.3% last quarter to 17.2%. Even without the tax benefits, it's 15.6%. And you know there are competitors like Ford and General Motors.
Yes, Ford is around 8% and General Motors is about 12%.
That's right, it's still a high level. Improving profit margin is crucial, and their reliance on tax credit revenue was lower than anticipated. The actual amount was around $439 million, falling short of the expected $700 million. What this means is that Tesla's core business, in other words, the profitability of their auto sales itself, is becoming more solid. Even if electric vehicle tax credits are reduced or eliminated in the future, it demonstrates that their manufacturing efficiency surpasses competitors, allowing them to remain competitive to some degree.
Tesla emphasizes that they're not just a car company, but also generate revenue from services and other sources, especially during challenging times. This rose 16% from the prior quarter, topping $3 billion, and the energy generation and storage division's revenue neared $2.8 billion. The energy sector's growth did slow down a bit, but analysts believe that in the long run, this division alone could be worth $200 billion. Ultimately, what matters is that they're attempting to create the all-encompassing Tesla ecosystem. That includes car charging, energy, and even artificial intelligence. Yes, that's right. Another important thing in that ecosystem strategy is data. There are about 5 million Tesla cars running around the world right now, and the cameras on these cars collect an enormous amount of driving data. This data is used by Tesla's own supercomputer, especially that Dojo, It goes to specialized hardware for processing video data, used to continuously develop artificial intelligence models, particularly full self-driving technology. This is really one of the strongest competitive advantages. The energy draw isn't just a side business, it's actually part of a bigger plan to grow it into a true future energy platform.
This appears to be the point that excites analysts the most. Looking at Tesla's humanoid robot, Optimus, people have described it as an iPhone moment. Just like when the iPhone first came out in 2006, there's an expectation that it's going to be on a completely different level compared to existing robots. Musk believes that the robot market will grow to be worth trillions of dollars and that Tesla will lead it. He even predicted that by 2030, if they produce 100,000 units a year at $5,000 each, that would mean an additional $2.5 billion in annual revenue. He sees full self-driving technology and robot taxis in a similar way.
The iPhone moment analogy is impactful and raises expectations. Unlike smartphones, robots, and fully autonomous driving technology face greater technical challenges, costs, regulations, and public acceptance issues with more hurdles to overcome. Bonsokwa himself also mentioned the temporary full self-driving issues. And honestly, goals like producing 1 million robots a year are quite ambitious, considering Tesla's current capabilities. We must assess the realistic feasibility of the proposal. Of course, the data and artificial intelligence technology accumulated during full self-driving development could also be used in robot development, so we can expect some synergy there.
From an investment perspective then, what is the outlook for the stock price? Analysts think the stock price may have formed a long-term bottom around the $200 to $220 range. Technical analysis indicators, for example, the Golden Cross, where the 51-day moving average crosses above the 201-day moving average.
Yes, that's usually seen as a mid to long-term bullish signal.
Right, people tend to interpret that positively. In the base scenario, the 2030 stock price projection is $1,625. But if things go well, it could reach $2,500 to $3,000.
Yes, but you have to remember that such forecasts are based on very optimistic assumptions by analysts like the robot, full self-driving or robot taxi businesses really becoming a huge success as expected. Simultaneously, the analysts themselves are also noting numerous risk factors. The electric vehicle market competition is intensifying. Chief Executive Officer risk, meaning that some remarks or actions by Elon Musk could affect sales.
That's right, because there's an unpredictable side to it, yes.
And the possibility of political changes like changes in tax deduction policies. And above all, the fact that full self-driving or robotaxi technology itself is still uncertain, whether safety and functionality will really be properly implemented, is a big issue. The potential rewards are great, but the risks are just as significant. To sum up,
this analysis presents a very strong vision that, based on Tesla's improved financial status, the company can now leap beyond automobiles to become a giant technology platform in areas like artificial intelligence and robotics. Literally, they're expecting an innovation on the scale of the iPhone moment. But at the same time, there are clearly various technical, market, and political challenges along that path.
That's right. In the end, Tesla's future depends on how well it can actually realize these ambitious visions and how it solves the various challenges that arise along the way. It's not just a simple car company, but a true future technology company with both the potential and the risks that come with it. Investment.
Aside from investing, I think imagining things like this could be fun too. If, just like in this analysis and prediction, self-driving cars or human-like robots really become common around us in a few years, how will our lives and society change? I hope you'll think about it at least once.
Thank you for being with us today. Have a happy day.
The beginning is important, so let go of your greed. Grow little by little every day and enjoy today's journey. Subtitles are provided and may include advertisements.